Welcome back. Joining us for a look at the day's markets action is Richard Court from Argon Asset Management. Richard, thanks so much for joining us today. Now, as we get started, I want to just talk about general market sentiment. We are seeing markets pretty flat or in the red or just above the flat line in the green. Are we seeing traders just approaching equities with caution ahead of that all-important US PCE print?
We're talking about globally. I mean,
yes.
Possibly. Yeah. I just think there's many moving parts. I think at the moment the world is almost on like the Fed watch or central banking watch, just to try and forecast what the central bank is going to do in terms of interest rate hikes or cuts. So I think as you get closer to a large meeting, then all eyes turn to the outcome of those meetings, and possibly traders will stop, just wait to see what the results are before doing anything.
And I always think to myself, markets have been hurt so many times trying to predict the Fed's next move. Why do we not just wait and see and then decide afterwards?
That's a fantastic question. No, look, I mean, you're absolutely right. I mean, even the Fed itself has been, its forecasts have notoriously have been fairly inaccurate. So it's not really a recipe for success in terms of trying to guess which way the interest rate cycle is going to move. We don't particularly we don't spend a lot of time, if any, trying to determine which way interest rates are going to move in terms of cuts or hikes. But some people still persist with this sort of approach, more of a macro approach. We spend our time worrying about the companies that we invest in, looking at their fundamentals, looking how strong they are, looking at their balance sheets and determining whether they can thrive and survive irrespective of the interest rate environment.
I mean, Richard, at this point, personally, I'm crossing fingers, crossing toes for a cut, at least one cut this year, so we can, start seeing it trickle down into South Africa. Talking about South Africa, we've been seeing some weakness in the local unit. It crashed near a 2-week low today from highs of like 17.95 last week. We are trading just above 18.30 at the moment. Is the volatility mainly on the back of, the political developments we've been seeing today?
I think so. I mean, I think it's as simple as that. I mean, I think the outcome of these negotiations and the GNU have a significant impact on the fiscus and monetary policy in South Africa, and also in terms of just economic reforms, which are all these important things that this country needs to get back on track and to get back to work. So if there's any sort of like rumor coming out of these negotiations that sort of puts that into jeopardy, then you see that the market's getting a bit jittery and the rand starts to weaken a bit, which is what we've seen over the last couple of days.
And it's currently sitting at 18.45, so it's just getting weaker by the moment. Let's take a look at some company news now. FirstRand expects to deliver annual HEPS growth of between 1% and 5%. It's attributed the stronger performance to a stronger second half in its financial year. The share price, however, lost about close to 2% at the close. Is this just reflective of the general sentiment that's playing out today and not necessarily that update?
Look, it's very difficult to distill exactly, but I mean, all of the banks, all of the big four banks were down today. I mean, ABSA considerably so. But with FirstRand, I mean, it was a decent sort of trading update. I mean, like a 5% increase is nothing to shout about, but it is a tough operating environment. But like FirstRand's a business, along with the other banks, that has benefited from slightly higher interest rate environment, where their net interest margin actually they earn more money on their deposits from having a high interest rate environment. So they've done better on that front, and on the non-interest income line item. But it's also about what the market was expecting. So maybe the fact that they also increased their provisionings in their UK motor financing unit maybe caught the market a bit by surprise, and hence why it's a little bit down today.
And sticking with banks, looking at Standard Bank's update last week, which was a pretty upbeat, FirstRand's upbeat trading update today also looking good. It's just that ABSA really, really disappointing markets.
Yeah, I mean, like where you have to drill down into the results as well to see where the differences lie between the different counters. I mean, ABSA, a lot of their I don't want to say pain, but some of the disappointment came from in their non-South African geographies,
Uh-huh.
in Ghana and in Nigeria. But uh, but yeah, I mean, like also their guided return on equity assets is a bit lower than what First Rand is guiding for. So I mean, they're in slightly different like places, those two businesses. But and that's sort of reflected in the share price and the market's sentiment towards them.
All right. So banks aside, Richard, what are you hanging your hat on today? What's your stock pick?
Yeah, my stock picks are very different to a bank. I'm going for the UK and JSE listed retail REIT, being Hammerson's. And Hammerson's, it's a business that I think was very prominent a few years back, but I think a lot of people have forgotten about it. It's been through the wars the last few years. Um, Not just COVID, even before COVID, it was suffering from an oversupply in the UK marketplace, oversupply of shopping centres. And they had to do a rights issue, they had to dispose of assets to try and shore up their balance sheet. But it now seems like the balance sheet is in a stable position. They no longer need to dispose of, they're not inclined sellers of assets. And their operating results are moving in the right direction. They're increasing their rentals and generating more cash, and they're paying out a dividend, and it's fully cash backed. And it seems like there are some catalysts possibly heading their way. Lighthouse is a significant shareholder that has decided they don't want to be a significant shareholder anymore. And they've been selling their shareholding in Lighthouse through the market. They're now below 5% of the shares outstanding, down from over 20% last year. So it's a significant block that's been sold. And then there's also the possibility of Hammerson selling their stake in Value Retail, which would lead to a significant amount of cash coming into the business and really completely transforming the balance sheet of Hammerson. So it still looks it looks on the cheap side. We think that the worst is behind it, and there's some optimism on the horizon.
So Hammerson, one to look out for. Richard, thank you so much for your time and insights and just updating us on the day's markets action. That was Richard Court from Argon Asset Management.